Most definitely.
Now, guys, you should go back onto the market. Like you should go back on the market, go scroll back and see like where price stopped. Why did price do what? What type of trend was pricing? Do you guys understand? That's why we call back testing. I'll show you guys the other side of the market. Now, when it comes to pairs like Euro, USD, and so forth, let's just do USD CAD. This is a very interesting pair that one of my students asked me to do yesterday. And a lot of people was like, okay, where do we go when the chart is like this? Can you guys tell me what is the first thing you would do? Daily chart.
Find the major key levels.
To be smart enough, turn your candles black. Then you can purely focus on market structure. Now, you identify where the price is. That is very important. The current price, what is it? 1.23,470. Am I right, guys?
Yeah.
So what that means, price is trading between which two key levels? I'm not continue. I'm not going on until you guys tell me this.
What did you say? Please repeat the question.
If price is on 123,000,
yeah,
that means which two key levels is price trading in between? You guys should know it off your head.
I think it's 126 and.
But 126 is not a digit of 5.
Using 120 and I think 120 and 1.
Between what? Now let's do this. It's 5, 10, 15, 20, 25, right, guys? Am I right, gents? Please answer me, guys, because that's when I know that you guys understand. Price is by 123, somewhere around here. That means it's trading in between which two key levels?
120 and 125.
Yes, thank you. So that means price is trading between. Now you don't need to look back. You can just focus here. Price is trading between 125, which is a major weekly key level, and 125. Now this is 125. Now 120 is very far from where the price is going to. We can all see prices dropping, right?
Yeah.
Now 120 is far. It's over here. So that means for us to get a closer key level, what do we do?
Sorry?
For us to get a closer key level from 120 to 125, it's a set of digit of 5. Let's say 50. Right?
Yeah.
If you divide it in 2, what does it give you?
120.
50 divided by 2.
25.
25. So that means we would be looking at 122, 500. That's the last time where price stopped at. You guys see how easy it is to break it down. The only time we expecting price to stop is by 122, 500. Now you can look deeper now. We can all see like how price stopped by 127, 500 here as well. Exactly. You can see how price broke below it, retested it, dropped straight to 125. even though price stopped around 126. Now, if you can pull a trend line, remember what I said. When you pull a trend line, you don't pull it from the old information because it does not exist anymore. You guys remember that? We always look at the current information if it's possible for us to pull a trend line. So in this case, if I decide to pull it from here, moving to the downside. Now, which we can see the price actually bounced off. Remember what I said, I like my eclipse just to have like a bigger understanding of where price actually bounced at. Price bounced there. Now, I want to show you guys something. When price stopped at this point, this point, this point, this point, what did the price stop with? It stopped with the week, right?
Yeah.
But with this one, price closed below with the candle.
It broke through.
It broke it. So that means you, in this case, you do what? You go out to your smaller time frame. Sorry, guys. And you look at what price is doing. And if price retests a key level with either a bullish or bearish engulfing, what do you do, guys? If price breaks a key level, retest it with a bullish or bearish engulfing in the headed direction, what do you do?
Enter trade.
Find entry. In this case, we had a bearish engulfing over here, which you guys can see. That was the first sell of all the aggressive traders that went on this trade. Now, second trade in this case, the last time price stopped is here and here. We can all see how price stopped around this key area. So there's a box around this area of how many times actually price actually stopped, right, guys? Now, the first sign of bearish momentum coming out of this as well is this candle over here, this black candle over here, right? This bearish candle. First sign of bearish momentum. You enter with a sell. Your stop loss is going to be slightly above the previous high. Your next target point is going to be your next key area. Now, when the price moves, we get to key levels or support and resistance levels where price stops a bit. Let's say, for example, we cannot ignore the fact that price stopped around here, right? So if you put a line around it, when price gets to that point, can you guys hear me clearly?
Yes.
When price gets to this point, you take what we call partial profits. That is you closing half of your trade without closing all of it. You can actually close half of a trade. Did you guys know about that?
No.
We're going to close half of your trade. You're going to take the stop loss of the other half and you're going to put it at break even. So you're going to put the other half of the stop loss by your entry point. So your trade can turn into a risk-free trade. Does everyone understand what I just told you guys now?
Yes. Yes.
Let me charge just 1 second. Hey, you guys.